Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein with your metals market update for August 1st, Tuesday, 2017, about 2:15 in the afternoon, and that is PM Central Daylight Time. Well, you can see the grain markets got hit, the crude got hit today, but the gold market up at the expense of silver. Even copper got a bit of a setback, but platinum and palladium had good days, even though the dollar is about 20 points higher, the euro is lower on the day. It's very much a mixed pattern, and part of the reason has to do with, especially in stocks, everybody's going to be waiting for Apple's forward guidance today. That's going to be a big, big play in the market. Then the market will quickly turn off of that, and it's going to go right to thinking about Friday's employment data. Is it going to show wage inflation? The numbers we got today in the U.S. basically stunk. We are still not seeing the cost inflation going up. And I would think that the employment data is not going to show that either. So what you're getting also is a bit of a bid into the bonds and the note market today at the expense of all that, yet the gold was able to rally, and that's all good news. Maybe it's the chaos in the White House. I don't know. Maybe it's North Korea. What I am doing, though, before I get into this, is I'm writing my gold report right now. And in that report, let's talk about that for a minute. I already have done my weekly charts. I've done my daily charts. I'm going to have a monthly chart in there. I'm going to have a price count, and I've done the seasonal. So I've got all those charts. I've already created those. The report might be ready sometime late tomorrow. I've already 50% done with the chart. I've got the charts done now. What I'm doing is writing the commentary for you and coming up with the conclusions, which I won't share. In order to get them, you got to get my gold report. And how you get my gold report is simple. You give me a call. Now, what I've decided to do this time is not necessarily send to our mailing list. You want the report, you go to our site, you fill out the form. That will be great. Otherwise, I don't know that I'm going to send it to you. My subscribers will, of course, get it, but I'm putting a lot of effort in this, and I want them to get it before anybody else. So you want to get it, be sure you get hold of us right away. Got that? A little confusing, but I think it's going to get interesting. Another thing I'm doing, if you have a chart you want me to cover on futures, feel free to write us. Do it through, ideally, Facebook, not Facebook, through YouTube, put it up there. I'll do my best to cover them on the different market sectors that I do. Last, I'm getting back into the saddle, and as the fall comes, I'm going to start doing more live webinars. So you'll be hearing about that. That's where you really get to ask questions. Think of it like an open house where you can ask what you want, and I'm able to answer any way that I want, because at least then you got in with the password and everything, and I meet the government requirements so that I can say what I want, because the people in that are invitees. Okay, let's look at this gold chart. You're back over the 18-week moving average. You're still caught between 1295 and roughly 1205. But the market's had a very nice lift to it. And as you can see, on a settlement basis in Dece Gold today, you are going to settle at 1279.40. You've slipped back since then, but that will be from everything my staff just told me before I put this chart up, where the settlement price came in. And that means this market's gone up roughly $79. And it's right at the peak of its high settlement. Now, the most recent high in the market's around $12.95. That's about $16 away. I don't know that you're going to get there or not. I know that you had another outside day up today. So, to me, I don't want to see that low taken out in the next two trading sessions. If it is, the likelihood of this market having peaked here becomes exceptionally high. Let's assume that doesn't occur. Well, the trend is up, higher lows, higher highs. That's great. The bias is up because you're over the 18-day average of closes, which, as I mentioned yesterday, is going to start coming in and getting very close and try to cross over the 100-day if prices can stay strong. Remember, the current price is a lot higher than 18 days ago, so the math of the number just keeps going up unless you get a big break all of a sudden in the market. So the odds favor this number is going to jump day by day a couple of dollars a day. So be ready for that. The end of the week should get very fascinating right about when we get the employment data, and that's what I think gold's going to be looking to see. What happens? Is inflation coming, not coming? Does it keep the Fed on hold? Does that pressure the dollar to the downside because they're not going to raise interest rates? That might be friendly to gold. There's just an awful lot that's going to happen this week. When I look at the Bollinger Bands, the next stopping spot, the upper Bollinger Band, could be, if it makes a run for it, 1286.90. Supports back at 1259.90, the 100-day average of closes. Now, I do have to show something right here. This was an outside day down. You do see that, right? It happened to come in at the upper Bollinger Band. My rule is that should not be taken out within 2 sessions. If it is, you've laid what we call a bear trap. You took it out the very next day, and you tell me what's gone on since that occurred. Now I'm pointing out to you that what you don't want to take out is today's lows, because that can create a bull trap and carry you back to this low, if not to the 18-day average. Doesn't mean it has to, but that would be the big warning sign. In terms of momentum, you've got a powerhouse on your hands. You have embedded readings with an uptrend in a market that continues to make higher highs and higher lows until this red line closes under 80. I just remain solidly in the bull camp. Don't know what's going on in our GLD and GDX, but our vendor, not us, it's not our charting software, the vendor had an issue and we just aren't getting stock quotes right now. When we take a look at the gold-silver ratio, we're finally getting an area where the market's getting a little bounce. It closed yesterday at 75.29. It's back into the 75.90 area. And as you can see, the silver market, like gold, has an embedded reading. Embedded's when both the K and D line, the red and the blue or dark black there, when they're both going sideways over 80, which you have. If the market wants to continue up, the combination of 1702 to 1712, the 100-day average and upper Bollinger Band, is an upside target. Now, that is $30 away. Doesn't mean it can't go there. Take out 1650.50 and I'd get nervous about the market. And you do realize this market did close a bit lower today. In the copper market, we're backing off a bit, but you still have the embedded reading, which means until this red line closes under 80, breaks in this market are unlikely, being bought by those bullish the market, looking to see if the market can run up and make further gains. Now, you have gone up rather sharply, and that becomes a part of a problem. I mean, when I see a market go from the 250 level to 292, 42 cents, you know, you got to be a bit cautious about that without much consolidation. In the platinum, overbought into the 100-day average in the upper Bollinger Band. I'm going to say it again. That's where I think the pros are coming out because of that. Not embedded. I think that's what they're doing. And I think they're doing the same thing coming out in the palladium, which is up to the upper Bollinger Band. The buy signals came in right through here, and the market has now rewarded those that got into that market. In the dollar index, the market is getting a bounce, but you're embedded. It's being sold, I think, by those that are believing that the dollar staying in this downtrend. And let's give President Trump a little credit, by the way. He took office, and the dollar by the month of February or so had peaked, and it has just been falling ever since then. And that was a goal of his. He thought the dollar was overvalued relative to the euro and other currencies, and he's done a heck of a job, good or bad. Maybe it's a job that happened because he didn't get anything done. It doesn't matter. What's happened is the market feels good. The stock market, you know, we're on what we call watch for 22,000 in the Dow. We've got a dollar that has not been strong. Certain parts of what he's done, whether it's inaction or action, has worked out for the man. Want to remind you about my gold report. You get it by giving us a call at 866-973-2077. That's the best way to make sure you're going to get it. The other thing, you can always go to our website, sign up for it. You can click up here at any point that you'd want. You'll see that icon if you're watching me on YouTube, or underneath us on a number of websites. It says click here for Ira's free offers. Do so. We'll put this in your hands. I'm Ira. Let us hear from you.